All right, and we're live. So let me now fix all the things while you say hi to the people.
Hey guys, if you're just tuning in, or it's your first time, Bootleg Weekly here with Tevis, my co-host, and this we have a curated list of topics. We're going to talk about Google, the Tensor chip, the Nvidia and OpenAI deal. We'll talk about Amazon and AWS, massive shortages. Of course, Amazon is actually rallying, and that's also something interesting to talk about too. Tevis is that rallying phenomena that's happening. We'll also end up taking your guys' questions too. So if you have questions that pertain to some of the topics that we're talking about, we're also, by the way, doing Tesla earnings preview, earnings eve, some thoughts on Tesla, and probably a couple other topics. But anything else, open game, you can ask away. Some questions we don't get to, but we try to get to most of them rapid fire towards the end. So thank you guys for joining us. And yes, we will do. Well, we're not doing CPI predictions on Friday. We're doing SoFi predictions on Friday. So, you ready for yours, Tevis?
Yeah, I was working on it a little bit earlier today. I am going to be working on it after tonight, like after we hop off, and hopefully record something tonight. So
I'm
TBD.
frozen up. I'm not sure if you can hear me. I'm going to exit and come back. Actually, there we go. It's working.
Okay. Yeah.
All right.
So hopefully by tomorrow I'll have something.
Yeah. I still have to work on mine. Tuesday's the worst day possible for that. So Wednesday morning, I think I'll get some work in, and then Friday as well to finish them out. But yeah, they're looking good. So Tevis, where do you want to begin?
Wherever you want, man.
Okay, let's start with a question from our audience first. Be atypical from Hello Jay at 601. Why so pink?
Korea. I'm wearing my Korea jersey that I bought when I was in South Korea. So this probably means that I have to do laundry soon because this is not normal attire. This is like live streams and houseware only.
I am frozen again. I'm going to exit Tevis. I'm going to come right back. I apologize.
Sure, buddy. No worries. And with that, I am going to bookmark. Yeah, Elijah, what am I going to be for Halloween? This is what I was thinking, guys. I made a post around this. You guys let me know what you think of this, okay? And then if you have a better idea, let me know. But I thought I was going to be like The Rock. Like old school, cool The Rock. I got to find me a turtleneck and a silver chain. And yeah, Gemini made that for me. Roy, what do you think?
You can pull it off. Yeah, do it.
Yeah. You think you don't think I look too much like a posh drug dealer? I kind of look like the Ibiza Final Boss guy. I feel like the fanny pack and the whole aesthetic with the turtleneck kind of
right out of the 80s. Yeah,
exactly.
No, it's great though. Yeah, you might as well do it. So yeah, I usually don't dress up for Halloween. I am the guy, and I'm sure that, I saw this meme online where somebody gave potatoes one year instead of or candy. And I'm like, I'm going to give kids a choice, so we'll have some really nice candy, also potatoes. I'm a history nerd. I love gardening too. I've not since we've gone into Texas, but I used to grow a whole bunch of potatoes. Grew all the vegetables we needed for like 8 months, and man, there's a lot of history in potatoes. So I will give the kids either a piece of candy, I think 3 pieces of candy or something, or a potato. And it's surprising how many kids get potatoes and no, it's not to throw at my house because they got a potato. They're actually really excited about it. So I do that instead of costume, but yeah.
Amazon dumping. Let me confirm this this claim. Amazon is down 1.5%. Why is this the case?
That's interesting. Yeah, it was up this morning. Yeah, while you look on that, let me share a couple of things on Amazon. There was, of course, a major outage that happened a couple days ago. It was actually Monday. And of course, right as the market's getting ready to open, it was a little bit before too, hitting a lot of different companies. Of course, it hit Robinhood, it hit Coinbase, it hit Webull as well. It hit Wordle, it hit Duolingo. It hit a lot of companies that have nothing to do with brokerages. And so when that
Google,
opened up, I expected, oh, yes, we'll talk about Google too.
Well, some breaking news. Anthropic is in talks for Google Cloud deal worth tens of billions of dollars.
Can you throw that up?
I mean, it's just Bloomberg Group. Let me see if I can find it. And then we can throw up an article, because we weren't even gonna have this as a topic, but breaking news sometimes happens.
Yeah.
Google and Anthropic are reportedly in talks on cloud deal worth tens of billions. Anthropic is in discussions with Google about a deal that would provide the additional computing power valued in the high tens of billions of dollars. The plan, which has not been finalized, Bloomberg reports, involves Google providing cloud computing services to Anthropic. Google is up 3% on the news. Amazon is down 1.5% on the news. I think the AWS thing being so recent also doesn't help matters with regards to cloud computing services.
Yeah, that's interesting. Talks don't necessarily mean anything, but usually when something gets released, like on Bloomberg, it's a pretty credible source. So, I mean, there's not many more credible. So, likely those are pretty serious and pretty far along to have gotten out like this.
Yeah.
And that sounds like a pretty big deal. So, I mean, honestly, Google Cloud Computing has been doing really well. And that's been one of the things that I think has been a drag on Amazon. If you look at it, it's up slightly year to date, but not much. And I think we'll just kind of combine Amazon and Google because they go together.
Is it even up slightly year to date, or is it? I mean, I guess with the after hours movement, it's still down year to date, probably.
Yeah, let me pull that up so we can take a look at the charts. In case Nala comes in, we can say, hey, at least we looked at some charts. Pulling up Robinhood Legend here. But yeah, the AWS, when it went down, I expected, Amazon might fall a little bit in share price. It didn't actually. It's done the opposite. And I'm curious, Tevis, do you think that's just like a reminder of how reliant, even though there are multiple cloud computing, there's really just, it's a traply mostly. It was just a reminder, like, this is a moat of Amazon's, and when it goes down, people remember Amazon's really important? Or do you think it's just maybe sector rotation or something else?
I mean, it's not the first time this has happened. AWS has been down in the past. I think this is one of the longer outages that we've seen in recent times, but we've had AWS outages for a couple hours at a time. I remember we also had the Cloudflare outage a couple months ago as well. So I mean, everything is interconnected. There are these services that power major software that you use on a daily basis. It was kind of a flex for everybody who didn't use AWS. Like, I know Elon posted about it with X and SpaceX still having uptime. And, of course, SoFi was up, and a lot of people were saying like, oh, well, this might be the final straw. And I mean, Interactive Brokers was working fine for me. My other broker up here in Canada wasn't that well because they were on AWS. And it's just, I think overall it's kind of interesting. I think the reliance can cut both ways, right? Because on one hand, you can say, well, it has a reliance. Everybody is dependent on AWS. And on the other side, you can say, everybody's dependent on AWS. Like, we need to distribute this a little bit more evenly, and just for contingency planning, if nothing else, for, redundancies and whatnot.
Yeah. I think it's mostly that. I think that there is some like this is Amazon year to date, right? It's up 0.82%. And so I've seen, and we can pull up these names too. In fact, let me just go ahead and do it. There's been a little bit of rotation recently. So we can add PayPal in there because PayPal has been a garbage stock. It just has been. We can add Lululemon. We can add Duolingo. Give me another one, or an audience you guys can chime in, of stocks that have been just pretty terrible this year. But if we look at it over the last week, which is way too short of a time frame to actually look at, I mean, this has been a big rise here by Lululemon. Amazon has been up a little bit too. PayPal has recovered a little bit. It doesn't look like it on that time frame, but it's just been interesting. A lot of the forgotten plays. Adobe, yes, Adobe. Thank you guys. I actually use this comparison. I'm talking about this too. There we go. I mean,
deep cut, Lisa.
you can see like all of these are kind of moving a little bit in tandem. I mean, not exactly. There's a big spread there. UPS, I haven't looked at UPS actually in a little while, so maybe getting too many symbols here. All right, UPS is actually doing well too. I think part of what's happening too is just it seems like those high flying names like Quantum, for instance, are selling off or consolidating, which is a healthy thing in the market. And you're seeing a lot of this type of action. Apple's another one, and of course, Apple has reported some good news, and there's some news for some of these too. But sometimes there's a bit of rotation into value, and I think that that's what's happening with Amazon. Now, we talked about Amazon last week, Tevis. Has anything changed for you as far as are you buying it, holding it left and right? Because I know Tanner is, I know Amit is, or are you like, yeah, there's better opportunities out there?
So yeah, Clip, I already got your question. Just you got to wait till the end because I've already bookmarked like 5 or 6 questions for the end. And if people want to ask more questions, you can do so, and I'll bookmark them as I see them. And we'll address them all at the end. In terms of Amazon, like I said this in the past on the podcast, I view it almost like a piggy bank where there is upside potential, but at the same time, it's not going to be as exciting for capital accumulation than something like a BMNR or a Nebius or something to that effect. Right now, I think I'm holding like 100 shares of Amazon or so. I was holding much more recently, but then I just sold a whole bunch because I wanted to, like, I saw dips in BMNR, I saw dips in Nebius, I saw dips in other things that I wanted to pick up. And I did that. And so the 100 shares is like, instead of me being in cash, I would rather write cash secured puts on Amazon, be in Amazon, and then write covered calls, aggressive covered calls on Amazon, like, 35 to 45 delta on every other week or so. And if I find like something drastically bad happens, like, Nebius falls 20% for whatever reason, then I'll just sort of pay the fee, the penalty to break my covered call, sell the Amazon shares and allocate that capital. And so that's really how I'm looking at it. It's like almost like I'm buying some type of like treasury bond or something. I just put that money in, Amazon is one of it. Nvidia was the other one. Like I opportunistically did a swing trade on Nvidia that turned out very well. And I mean, I know that you and Tanner sort of critiqued me that like I didn't hold it, but it's like, dude, like I bought it at 100, I sold it at 150 2 months later, or 155 or whatever. Cash secured puts to get in, covered calls to get out. Thank you very much. I made 50% gain in 2 months. I'll take that all day, every day. Yeah. And so the point is like, I think the Mag 7, Mag 6, whatever you want to call it, Fantastic 5, I think these companies are going to be long-term winners. They have very deep war chests. They're resource rich. And sometimes the market disrespects them. I mean, we were on this podcast. When was it? Was it 2024? Yeah, 2024 in the summer. I said, hey, look, everybody has given up their AI playbook. Apple hasn't. Bought Apple at 164, sold Apple at 200 3 months later when they announced at WWDC that they were going to introduce AI in the phone. Thank you very much. Did I, would I have made more money if I held it to 260? Probably, but that money circulates into other things. And so the point is like, I feel very comfortable running a wheel on 5 or 6 positions, and I can do it super aggressively because I know that the max I'll be down paper losses. But the plan has always been to hold those names for a long time. In the short term, I want to do it on even safer plays. So I'll do it on, the Fantastic 5, the Magnificent 7 stocks. Because like, okay, if Amazon has some horrible news and trades down to 200, well, it's like, okay, well, they have a stupid amount of cash on hand. They still have growth prospects. And I mean, Jassy hasn't been really transformational for this. He hasn't shocked the world, let's put it that way. But the point being is like the business model itself is a juggernaut, right? Like I want to bring up this comment because I think it's very relevant. Lakeview says, if you ask a random group of 100 people in the world what Amazon does, they're going to answer e-commerce. Then you realize it runs half the internet. So these are very deeply entrenched product offerings across the world, and it's evident in the fact that they make, dozens or tens of dozens of billions of dollars every quarter. And so, yeah, I'll use it as a piggy bank. Do I think it's undervalued? I think it's the most undervalued right now of and name one other one that's more undervalued.
Well, you didn't qualify that. Are you saying of the Magnificent Eight?
Yeah,
You just threw it out there, like
whatever we want to, like however many magnificents there are.
Yeah, okay. It might be in Google or Nvidia. Honestly, I know Google is up at all-time highs and near all-time highs. Nvidia likewise as well. But you look at the positioning of these companies, and I would much, even if they're not undervalued relative to Amazon, and maybe they're not. I would so much rather be positioned in either of these. And I'm not, the biggest proponent of Google, but like one of these things that we're going to get into here in just a second is very interesting to me. My problem with Amazon, okay, I absolutely agree with your philosophy as it comes to Amazon. You're like, hey, it's basically like cash that's invested. Like Amazon, barring some crazy macro thing, is going to be just fine. It might go up a little bit, might go down a little bit. You can, somebody had said it's good for wheeling. Like if you will aggressively, yeah, you can make some premium off of that. It's not the most volatile stock, so I'm sure premiums are not amazing, but it's not a bad play at all. If you just have a chunk of cash and you're saying, okay, I want to be patient, but I also know if I have like $50,000 just sitting there, I'm going to dig into that. So let me put it in Amazon instead, put it in your piggy bank. And then when you see an opportunity like Nebius, go after it. It makes sense. Andy Jassy, I think, is better than Tim Cook. Tim Cook is great at what he did. He helped, supply chain issues. He's an operator, not an innovator, not a driver to that next leg of the business. I think Andy Jassy is that as well. Bezos was, of course, the prodigy. He was there to, to get Amazon off the ground. He's still somewhat involved, but mostly he's not. And I think they really need somebody that's very much a driver of innovation for Amazon, because they keep dabbling into different fields. One of those, of course, intersected with HIMSS, but they've not made any like massive, crazy splashes really since AWS. They've done less with more, I think, just like Apple did when it came to the AI race. Now they do have some tensor chips as well that may or may not take off the ground, but contrast that to Google. Like the only thing that I'm concerned about with Google, and the only thing I've really been concerned about, is search. And search seems like it's maybe more durable than I gave them credit for. All the rest of what they're doing is great. And then you have this piece right here, which I thought was really interesting. So we had a Wall Street Journal article. This is Rihard Jark, that he didn't break the news, but he had a really good observation. And in essence, what this did is it gave us some behind the scenes look at that OpenAI and Nvidia deal. And the driver here basically was that, well, two things. OpenAI did a partnership with Google Cloud Compute. And that's, it's one of the three. You're going to go with one of the three, maybe a couple of the three. But they also then made signals that they were going to look at using Google possibly as an alternative to Nvidia. And it says after that story was published, Jensen called Altman. I can't call him by his last name. It's all Jensen Huang. So called Altman, asking him if it was true, and signaled that he was open to getting the talks back on track, according to people familiar with the matter. And Jensen realized that Nvidia could help OpenAI by making a direct investment in the company, a person who basically said. And this is all after those two things. Now, Rihard here says, in essence, Jensen wouldn't be concerned, let alone call a client about any chips of competitors that he didn't find would be real alternatives. And I think that's true. He has a good idea of who's in the space and what they're doing. And of course, Google, this is their 7th generation. I believe it's 7th generation. Right there. This is announced back in April, of their tensor chips. And these TPUs, when they first were launched, comparing them to Snapdragon, because they were just used in their mobile devices, they had a lot of problems and issues. It was not nearly as good. It was not really a one-for-one replacement. But they've gotten a lot better on that side, as well as these specifically designed for inference, the Ironwood. When they announced this, I'm like, well, maybe it's just more of an announcement type of thing. They'll use them in-house. We'll see if there's an actual market. But what's really interesting is it seems like when OpenAI tipped their hand and they said, hey, we are looking at an alternative from Google, Jensen took that seriously. And of course, that deal was made. Now, it was very good for Nvidia. I'm not saying like this is bearish Nvidia or anything, but we may have to give more credit to yet another one of these aspects of Google's business, which is their chip design business, which I don't think is priced in at all. And there's, other than search, like so many ridiculously strong things with Google that if I had to pick, Nvidia for sure, I'm already invested in that. Probably Google as well over Amazon, easy. I could argue most of the Mag 7, not Apple though. Probably not Tesla either, which we'll talk Tesla in a bit. So any thoughts on that, Tevis?
I think we will need to do a quarterly re-ranking of our top 7 Mag 7 stock at some point, because it's the field changes so drastically every single quarter, man. And we can convince Tanner of this as well, whereby the last time we did a ranking of, hey, here's our favorite, best to worst, or most to least undervalued, or whatever, that might look drastically different now because all of these different developments that come out. I think Nvidia will consistently score high on the list across the board for all of us. I think Apple will consistently score low on the list for all of us, but what's in between is subject to change. And I think, we can talk a little bit about Tesla as well going into their earnings, because our opinions of Tesla might change from quarter to quarter, depending on the new information that we have and the confidence that we have around it. With regards to Google TPUs, it's really interesting because, to my earlier point that I made around Amazon, the reason that these Magnificent 7 stocks are anti-fragile, they're somewhat indestructible, is because as a byproduct of their resource hoarding, they also have the best human capital. They have the best engineers in the world. They have the smartest individuals in the world. And so they have the highest propensity of experimentation in new industries, especially because they have investors breathing down their neck to find more ROI, right? To find higher CAGRs. And so as a result of that, it changes your expectation for what this business is. It does not fit neatly into a box. A business that you think is predominantly an e-commerce business, to Lakeview's example, is all of a sudden powering half the internet. And a business like Google that you think is a search engine is in fact making their own AI chips. And so it's just like everything becomes everything, if that makes sense. These businesses sort of tend to have their hands in all of the cookie jars simultaneously. And that's just the new paradigm that we find ourselves in. And that's as a result of having a monopoly on human capital, on human intelligence, and a monopoly on the resources. And they could just crank that flywheel so much harder than a startup can, for example, because they have to pick and choose their battles.
Yeah, and I agree with that. That's what, going back, not to rehash this question from last week, but it's one of those indicators that we're not in a bubble at all. Because you look at the companies that are actually involved in this, for the most part, there are some startups, and OpenAI is a startup, technically, kind of. It's not pre-revenue though. Massive revenue, growing rapidly. You look at the Mag 7. You might argue and say, well, Amazon's just kind of loosely in this AI arms race, and also Apple. But yeah, Broadcom, you can add them in there. Every other one is positioned incredibly heavily in this. And these are incredibly profitable companies that can afford to invest in this next future growth plan. And the way that each of these CEOs, we'll hear it again this earnings season, even from Tesla, the way these CEOs are talking about AI is like, not only is it real, but if they do not do the proper investment, they will fall behind as a business, and that is unacceptable. It's more acceptable to lose money. Zuckerberg put it well.
Yeah.
I love that idea though, Tevis, real quick.
Yeah.
At the end of earnings season, NVIDIA will go last out of the Mag 7. Let's do a consensus bootleg ranking of the Mag 7. That'll be fun.
Yeah, and look, like, I don't think you could, like, I remember in the 90s, Buffett famously had that, like, that bet where a monkey can throw darts at a dartboard and over the next 10 years beat the average hedge fund manager. I think that was like a anecdote or whatever. I don't know if they actually did something like a experiment in utter randomness. I think to that effect, if somebody is blindly, and please don't do this and do your own homework and not financial advice and all that crap. Hold on, let me put up the banner. Look, I think to that same effect, if somebody's blindly throwing money at the Mag 7, the chances that you're going to be higher 10 years from now far outstrip the chances that you're going to be lower, except if you throw it all into Apple or something.
Yeah.
And even Apple, I think, can still be higher 10 years from now than lower. I mean, it depends, right? Like as much as we harp on Apple, they can completely change their business trajectory in a matter of 2 months, right? Tim Cook announces he's retiring, puts in a protege who is a big product innovator. They announce that they're going out of, all of these stupid ventures that don't make them money. They're going to go double down into AI, integrate AI, and layer in the personal context of all the data that they have across the entire ecosystem for you, increase the walled garden they already have, and all of a sudden, Apple's a top player in the space. And so my point is, it's like, because the landscape changes so quickly, to our earlier point around re-ranking, I think they all will be very successful. Like, they're anti-fragile in the sense that it's very difficult to bring these businesses down, because if they see that they're losing market share to one another, they can reallocate accordingly. And it's really interesting because it completely changes your perception of what you think a big company is, right? You read Peter Lynch, and these big conglomerates are absolute laggards. They're inefficient. You can't move anything past. There's so much red tape. But right now, I mean, the modern companies, yes, there is that. And you have a bloat that every now and again you have to cut a percentage of the headcount. Meta did it. Google did it. Amazon sure as hell did it, especially with the robots. But at the same time, they also operate in a very startup agile mentality where they compartmentalize into smaller silos that then themselves operate as startups. And I think that's a unique value proposition, because these companies are born from the dot-com era.
Yeah. I mean, they're agile. A lot of companies, when they hit 20 or 30 years and they're beyond their founder, they don't do what And to their credit, Google's been a lot better. Like, I was pretty bearish on them 2 years ago. I was just slightly bullish at the beginning of the year, bearish on search, bullish on everything else. They've been better than I expected. Amazon, maybe it's the same boat, where I'm not giving them enough credit. Bezos is still involved at some point. They may realize that they need to make a pivot from Jassy. And Jassy's not an idiot. Like, he's a brilliant leader, but he just may not be the right fit for what they need. Yeah, I saw that comment, Lakeview. That was very good. And we might be underestimating. Like, the thing is, if Bezos was the CEO and he wasn't, hanging out with his wife on the yacht and focused more on that, which is fine. Like, he deserves that. If he was there every day, being a driving force in Amazon for change and innovation in the future, I would not bet against him. I would actually get an Amazon position immediately. But Jassy is an operator. He's good. But in this time of massive change, just like it is with Tim Cook and Apple, you need somebody more. Now, that doesn't have to be at the CEO level. It traditionally is. But so far they've underwhelmed me. And the market is pricing them accordingly. So we'll see. Let's talk. Go ahead.
If this is fake, somebody's getting kicked. Let me search it. That's the rule. That's the rule.
While you're looking at that, something else, Perplexity is not a public company. I've been using the Comet browser a decent bit on my laptop, and it's amazing. And OpenAI actually announced a browser today as well. So can invest in them, private equity, and all that. It's interesting, though, that there's that may be real competition for Google. We'll have to see. I didn't read the details. I didn't have time. I just saw the headline. So it could be built on Chromium, which is a Google product as well. So wouldn't be that bearish for Google if that's the case. And it wouldn't surprise me, honestly. But yeah, OpenAI is aggressive enough. Altman is a very credible and competent CEO. I don't have to like him necessarily or trust him, but I mean, he is. And they may surprise us as far as the product lines that they get into. So
okay.
Is that real?
I can't find this, but if you can find it, because he said it's real. If you can find it, just throw it in the chat, and I'll try to put it up. Maybe I'm missing it. I want to give you the benefit of the doubt. Yeah, look, I want to talk about OpenAI's browser, and I wanted to talk to you about it specifically because you already use Comet, and I'm not using an AI or an LLM enabled browser yet, and so I was going to download this tonight. But then I thought to myself, well, if I'm going to go through the trouble of downloading something, I kind of want to wait a couple of days and see how it compares with like Comment or with others, so that when I do download one, I can just download whatever's the, the leading one, right?
Yeah.
But I think I might just do it anyways.
I'm going to look on Perplexity itself and just ask, is Apple buying you? So it says there's no verified evidence. Now that could just mean it's very recent and there's not a lot out there. So
yeah, exactly. Let's give it 5 minutes. I seriously want to give him the benefit of the doubt. This is not how we make friends.
I mean, like this type of news, though, even if it's not real, which don't spread false news or information on here, guys. But that's very credible. Like I actually thought that Apple probably would do this at some point, and we'll see. But it's a good browser, good product. And at some point when I get time, and maybe it'll be this weekend, I thought I had time last week and I ran out. I'm going to do just a little video on my some of the use cases of what I'm using the Comet browser for. So not related to investing. Usually it's all investing videos, but that'll be a fun one. So Tevis, let's then go to the other Mag 7 stock that we hadn't talked much about, but they have earnings tomorrow, and that's Tesla.
Tesla.
So
I keep forgetting the Mag 7, honestly.
Yeah, in my position, by the way, I did a portfolio review over the weekend as well. Or was it last weekend? Yeah, it was actually early in the week. But it's 1%, actually under 1%. So tiny position, my smallest position. I'm not as bullish as I was. Love the products, love the company, hope that they do well. It's pricey for what it is. Now, this quarter, if you look at earnings expectations, they are very generous. There we go. Quarterly. Okay, so I'll throw this up here. And I'm not paying for Fiscal AI, and I don't have a partnership with them, but it is a good product, and it kind of shows what the range of what they're actually expecting in terms of earnings for quarter 3. So it's up. A lot of this is the demand lever that was drawn forward just because of the expiring tax credits for at the end of September. So this is the last quarter where they really had that. Quarter 4 is probably going to be pretty poor relatively. Now, it's usually their strongest quarter just because of holiday spend. I think that, at least for what I've seen from estimates, that analysts are underestimating how good the numbers will be in this quarter and how bad they will be in quarter 4 as well. So it'll be really interesting to keep an eye on what happens there. So what are your thoughts? Any expectations, anything you're looking for earnings tomorrow?
Yeah, so let me preface by saying that Tesla is about almost 4% of my portfolio. That's drastically come down. Like in 2021, it was 50%, and then SoFi took that number 1 slot. And recently, even this year, Tesla was like 15%, and then it came down to 10, then it came down to 7, now it's down to 4. And much of that was just profit taking because I've held Tesla for the last 6 years now almost. So I'm bullish Tesla, bullish the mission. I just think that the thesis of why I sold it over the last quarter was that we are sort of in a lull period where we don't have a lot to hold us over. We had the big sell the news event on FSD, and yes, FSD has been expanding. I expect them to talk a little bit more about that around the timelines and what they can feasibly start to model out from a revenue perspective for FSD, like some early indications.
Mm-hmm.
The optimist is too far away, and Elon himself said, hey, look, like we're going to see real revenue and margin expansion in 26, 27 and beyond. And it's like, okay, well, great. You're not in 26 or 27 or beyond right now. You're in 25. And so in 25, there are some headwinds. I mean, granted, like Elon alienated Trump back when I sold it, and we didn't have this new CEO compensation plan, which we now have. And I think that's going to be even bigger than earnings is going to be that day where they vote on it. I think it's in November, end of November. Because if in fact they do vote on that plan, and if Tesla does get approval from shareholders to invest in XAI, well, all of a sudden that's going to really accelerate the Tesla thesis from a growth narrative perspective. It's still not going to change any of the numbers, in the short term, but it's going to change a lot of the motivations in the short term. So yes, I agree. The bull thesis has completely fallen apart. If you literally didn't listen to any earnings call and you didn't see any company news, and all you did was you looked at the financial statements on an Excel format every single quarter, you could say to yourself, absolutely, the bull thesis has fallen apart. And this is coming from somebody who is a Tesla bull himself. I've said it before that, with Tesla, it's really two factors. It's what story do the numbers tell from a fundamental perspective, and then what story is the growth narrative. And Tesla trades mostly on narrative, which is why it's still over $1 trillion and it's not, $100 billion right now, because the numbers have completely deviated from the script. But I also agree with this comment, don't really bet against Elon because he can surprise to the upside. And I think a lot of that is going to be around his motivation. I really want to throw this post up just to remind people of, the individual that we're dealing with. I saw this world's most private valuable companies, so OpenAI, SpaceX, ByteDance, Anthropic, XAI, so on and so forth. And then somebody said, hey, look, for whoever's keeping score, Elon has co-founded the first OpenAI, second SpaceX, and the fifth most valuable private companies. Of course, this is XAI, as well as the 10th most valuable public company in the world. I genuinely don't understand why anyone feels courageous enough to bet against him. So you have the top 10 most valuable private companies, and you have one person that's co-founded 4 of those companies in the top 10 list. I don't necessarily want to take on that risk of betting against that person. I think I've actually profited off of people who have bet against him. And so I think the max I will do with Tesla is increase or lower my exposure, but I don't think I'll, completely sell out or especially not go short. So what am I saying? I'm saying that, and we should make a bingo card out of this. Tomorrow, Elon's going to say a whole bunch of stuff, and it's going to be reiterations of what he said in the past. Actually, Roy, I want to hear your response, but as you respond, I want to go on Say Technologies, and we're going to look at, I see what you have pulled up, so we can look at that too. But I also want to pull up the questions so we can cover those. But like tomorrow, Elon's going to pump. Elon's pumped on earnings calls for the last several few. And nobody has mapped this out that I've seen, but it would be really interesting to map out Elon pumping correlated with the fundamentals dumping, because I would argue, anecdotally speaking, there is a near perfect correlation where you see fundamentals plateauing and coming down. Elon gets even more bullish around, $10 trillion company, blah, blah, blah. So he's going to do that for sure. I'm going to be looking for more color on FSD expansion. I'm going to be looking for more color on another Optimus day that we can see the advancements. I'm going to be looking for more color on the Tesla shareholder vote, as well as the XAI investment and how that integration plan works, because these are the questions or the answers that will dictate whether this is going to be a very profitable investment in 26 and beyond. For 25, I think the next 2 quarters are kind of written off at this point.
Yeah. I mostly, I disagree with some of what you said. You said the bull case wasn't intact. I think the near-term bull case is not intact. The long-term may still very much be intact, which is a combination of full self-driving robotaxis and then ultimately Optimus as well. Now, other people might put some other things in there too, but this is why I've sized Tesla the size that I'm at. I treat it, even though it's profitable, massive company, real products. I'm in Tesla just a foothold, and I'll add to it. If Tesla sells off and it's trading in the low 200s or mid 200s, I'll start adding shares at that point. I could go lower, maybe it won't go there at all. And that wouldn't surprise me either. The stock doesn't trade based on fundamentals, but I'm in it basically for Optimus. I think they're still positioned very well. Maybe there is some brand damage there too, but I think they have a real opportunity, because the hardest thing to do is to actually scale, to actually manufacture at scale. Tesla I don't think anyone, even the most bearish people out there, doubt that Elon Musk and Tesla are going to be able to scale. Now, is Optimus the furthest along of all the products? No, but I think there's plenty of time still left to catch up. And we'll have to see how it goes. But if Elon Musk wants to get that done, I mean, we've seen what he's done in the past. So shorter term, of course, it's about energy, which is stronger than you might think given the interest rates, because a lot of it is commercial that isn't impacted. That's doing very well. Services doing very well. The actual EVs are doing okay-ish. They'll be very good this quarter. Next quarter, I think, will be really terrible. We'll see how much is actually priced in the stock. Elon, I do think will pump. If you look on X, and we've done this before too, where Elon Musk is tweeting and posting a lot of stuff, and he has, like 6 hours ago, he went on a flurry. That's usually a good sign for earnings too. So I think this, I mean, I don't think anybody's thinking this is going to be a bad earnings. It's going to be a really good one. What's fun is, here's Kalshi. What will Tesla say during their next earnings call? And so you have a whole range of very likely, of course, Optimus, it should be like, the free bingo space just about, and some much less likely options like Doge, Grok 4, shutdown, supercharger. We'll have to see. So, of course, Elon could be funny, and somebody's like, hey, would you mind saying the word Doge during the, we just live in a weird time, but
we do live in a weird time. Roy, what would you say? What would you say is, like, if you had to bet on it, what's a question that that would be asked? Because I want to throw up Say Technologies in just a second.
Ironically, like, I've actually not looked at it this quarter. Usually I do. I have for other companies. Most other companies will ask when dividend and what's the other one? Sometimes about stock split. I think stock split might be there. Tesla actually tends to have better questions from Say Technologies. I don't know why. So I would say stock split and hopefully not dividend. I've not seen that in the past with Tesla, but maybe. And I think Optimus will be the other one.
Yeah, Tesla generally has a very well-informed, generally has a very well-informed investor base, because it was so misunderstood for so long that the retail shareholder base, as the stock price appreciated, did two things underlying. Number one, they found alpha way better than the street did, similar to SoFi, right? Like, a lot of us in the retail space know way more about SoFi than Wall Street, and as a result, we profited off of that, off of analysts. Like, some analysts are still giving SoFi $11 price targets. And the second one is they became more cultish and more euphoric, more adamant in their pursuit, because they were proven right. And for better or worse, I think that's just what we saw evolve into Tesla. Okay, let's see. All right, here's the earnings call questions for Tesla Q3 2025, October 22nd at 5:30 p.m. Eastern District time. It's district, right? The D?
Mm-hmm. Eastern Daytime.
Sure.
Maybe.
Eastern time.
Yeah.
Okay, so we have 230. So this is organized by most shares. 230 questions with FSD, 187 for Optimus, 112 for Cybertruck, 88 Robotaxi. Well, I guess like 150 for Robotaxi, new vehicle models, AI, Roadster, insurance, Tesla phone, 29 questions. I don't know.
The insurance one, I'm curious on that. It seems like they may be going the partnership route.
Did you see the Lemonade partnership?
Yeah, I did. Which you're a Lemonade shareholder, so talk about that for a minute.
Sure am, sir. I'll talk about it in just a second, but let's go through some of these questions. So here we have it organized by most shares. I think there's also top voted, but whatever. Latest Robotaxi metrics: fleet size, miles, rides completed, intervention rates. So this is like the thing that I was talking. This is a really horrible highlight color, but the thing that I was talking about around more color around Robotaxi expansion and how that's going. Also, the same guy, Jimmy. What is the demand backlog for Megapack, Powerwall, solar energy storage systems? This is actually really interesting because we saw the energy business sort of blowing up in the last couple of quarters. New car model plans, so compact car, SUV, pickup truck. present challenges in bringing Optimus to market, considering app control, engineering, hardware. Yeah, so you can see the questions there. A lot of these are going to be addressed, at least 4 of them or so, if I remember correctly from past earnings calls. So yeah, we should get a lot of color, but some of them might just be like Elon answering in one word. So
Yeah.
um,
Yeah, I think it'll be upbeat. We'll get a lot of information, which will be really good because I think more than Q4, people are really curious what Q1 looks like next year. So,
yeah. Okay.
Lemonade.
Microsoft Office for cars. This sounds like if you needed to torture me, this is how you'd probably do it. Okay, Lemonade. So so Lemonade announced the partnership with Tesla. Really interesting. And I think it's interesting given the magnitude here, because you got to keep in mind, Roy, that Lemonade is a $3.5 billion company.
Tiny.
And Tesla is a $1.5 trillion company. And so I think it's a very telling thing of Lemonade's penetration. Their chief, or their co-founder, I think he's also the chief product officer, posted at Elon, and he was saying like, hey, if you want us to insure FSD, we can do that for a really favorable rate as well. And I think that's going to be really interesting too, because if they take them up on that with the FSD insurance, then now you're insuring all the rides that don't have a driver in them.
Yeah.
Yeah, that post had 1.5 million views. So let me throw that up right now. So here, we're starting to roll out direct integration with Tesla vehicles. And you can see that it's very simple. Like all you do is you go on Lemonade, you sign into Tesla, you authenticate that you are who you are, and you can share the details. You scan this, and it takes you to your Tesla app, and that's it. You don't have to download any hardware. You don't have to do anything like that. You're connected. So here, and I think that's the thing that makes it really unique, is like, hey, there's no hardware installation, number one, and then the costs make sense. It's way cheaper than anything else that you could use, number two. I think Brad Freeman posted, because I made a video on this. It's my most recent video. Brad Freeman posted saying that Progressive was the only real comparable offering from a product perspective. The others basically needed some hardware installation. You install a device in your car to basically measure, like, okay, how are you braking? How are you driving? So on and so forth. And they determine your rate from that. But this is really relevant, Roy, as an option, as a viable option for states that don't have Tesla insurance.
And there's a lot of them.
There's a lot.
Correct me if wrong, but I think it's like a dozen states that Tesla has insurance in, but most of them they do not.
Most of them do not. Yeah, exactly.
And so, they ended up, initially when I first got into Tesla, I'm like, hey, this is a real opportunity. Insurance is a mess, just for Tesla, but it's not expanded as much. I don't know if it's just focus, if it's, issues with regulators. Maybe it's harder to break into states than I know. But yeah, this seems like it's a one of those win-wins, Tevis. And then to Lemonade's credit, there are companies out there that will partner with anybody and everybody. It's like, like Shopify. Yeah. You'll see them partnering with somebody new like every single day. They love to partner. Google is somewhat similar. PayPal is somewhat similar. There's a bunch of them. And then there are some companies that like never partner with anybody unless it's absolutely necessary. And that is Tesla. And so them partnering with Lemonade is not, don't read it as maybe something comes of this. It's like, no, they looked at things and they're like, hey, this company can help us get places that we could not otherwise, which super bullish to Lemonade. I'm not in it, but I mean, I'll call it like I see it. And also for Tesla as well. Like that's very, very good.
Yeah. And let me add one extra thing. So first of all, I saw multiple posts on X around retail, just regular people who are comparing rates and who are switching over as early as a couple of days ago when they announced this, saying that, hey, I'm saving hundreds of dollars a month essentially by doing the Lemonade insurance as opposed to, Geico or whatever else you might use. So that's number one. It's a superior offering because it doesn't allow it doesn't necessarily need a hardware device installation, and it has a cheaper price. Yes, I am wearing a soccer jersey. It's the South Korea national team soccer jersey. The other thing for Lemonade, that threw me off. I don't know why I answered it. The other thing that's interesting for Lemonade, Roy, is that the same week that they announced this partnership, do you know what else they announced? They announced the PayPal and Venmo chief marketing officer is joining Lemonade's board. They also announced a VP of AI from Meta is joining Lemonade's board. All three pieces of news dropped on the same week. And for any other company, this thing would be flying if a $3.5 billion company partnered with a $1.5 trillion company. But you know what Lemonade did? Lemonade actually fell about 7% over the past 5 days. It didn't move on the Tesla partnership news. Lemonade is actually down 17% over the past month. It peaked as a result of the last earnings because the results were great. And it is now down over the past month. So, I mean, granted, Lemonade is still up 93% in the past 6 months. But the point is that there's so much left to go. And Lemonade is an interesting company that I bought more, right? On October 13th, I posted about it. And I'm going to continue to buy more. It's about like 3% of my portfolio. The reason why is because it's at that inflection point of just crossing over into that sustainable profitability growth. The growth rate from a top line is there. The cash flow is improving, and they're just getting to that point now that we saw SoFi pass a couple of years ago. We saw Robinhood pass, and what happens when they cross that inflection point is the stock skyrockets.
Yeah, and we saw that here. I actually, this is an old thing. I just moved the arrow down. I forgot that I did this back in August because I was actually looking at Lemonade a little bit more than not in it. It's not really on the radar. It is just because of our competition. But it's interesting. I'll have to give it more credit than I did back when it was significantly cheaper earlier in the year. Sometimes it happens though. Like honestly, just because the stock price runs up doesn't really mean it's necessarily like a worse buy. When you see big news like the Tesla news dropping, I would have expected it to actually climb quite a bit off of that. But yeah, be sure to, if you guys are on my stream, not saying leave, but hop over to Tevis's, give him a like real quick, and come on back. Let's get him that $50.
Brock always does these challenges. Last time he said I'll offer $100 if I wear a dress on stream, which I'm absolutely not doing. I'm not
you
like
came close. You came close.
So yeah, drop a like on the stream if you like the stream, and if you don't, then don't like it. I can't ask for more than that. Yeah, so Lemonade I think should be something on your radar, Roy. I think it's it's not a massive allocation for me because it's also not like a sustainably profitable company, but everything is going in the right direction, and it's going to be a matter of a couple of quarters. It's definitely going to be past that inflection point in 2026. And I think in 2026, people are going to wake up and realize, holy crap, and this thing is going to, fly off the handle.
Okay, let's one more that I want to talk about on this end, and I think you had another topic too. This is weird, Tevis. Gold.
Oh boy.
So it's up a lot this year. Like this would for a stock is like, wow, that's a really good stock. Precious metals, they can move like this, and there can be squeezes. The silver squeeze back forever ago. This is, of course, a lot of things, but a lot of it is basically central banks seeing that it's a good time to get into precious metals. A lot of buying pressure in India, a lot of buying pressure in China as well. You look at over 5 years, like it can be stable in price for a long time, and then it goes through these moments. So, it's interesting because we actually see it's a pretty big drop from its peak in a short time relative to precious metals. And then today, now they're down a little bit from what they were earlier, but crypto is doing quite well today at the same time as gold over the last few days, really, as gold has been pulling back too. So also US 10-year is down under 4%, which is not really related, but it's an interesting thing. So do you think that this is just too much too soon as far as gold price, that basically the people that wanted to sell gold have, and they've satisfied the demand there? Is this a shift where people were maybe going after gold just because flight to safety or not trusting central currency as much? and then they're like, you know what, cryptocurrency, let me give that a bid? Or is this just an aberration? Weird things can happen over a single couple of days.
Man, I have so many thoughts on this. Okay, so I think it's so predictable in terms of human behavior, man. When it's so weird, but we've talked about this on the stream and we've been right on a lot of these things. You remember, I was remembering when I was like, oh, should we just buy a stake in Intel because the US government just took a stake? Like, they're not going to let it fail, right? Intel, popped off the back of that news. Like, we've had so many instances where we've just called things, and whether it's just muscle memory from repetition or whether it's just pattern recognition, I don't know. I posted this. I said, hey, look, my cousin who doesn't invest at all reached out to me asking how to buy some gold. And he said, quote, because it's going up. And I said, is it finally time to short it on October 16th? And then a few days later, I posted again on this gold rush in Vietnam as people were storming the shops to buy gold. I said, how many times have we seen October 17th? How many times have we seen blind retail euphoria bidding up an asset to crazy levels only to be dumped on and left holding a bag? And I said, don't worry, I'm sure this time is going to be different. And then, earlier today, even I posted and I said, look, who could have predicted this, guys? Surely more people must be lining up around the block. This is so ridiculously dumb because it's just I'm not against gold going up. Don't get me wrong, right? Whatever. Like, if I'm a bullish on Bitcoin, I can't be bearish on gold because yes, Bitcoin has more properties that are applicable in the digital age that we live in. And I would want 10 times out of 10 buy Bitcoin over buying gold. But at the end of the day, I think the rationale for buying one over the other or for buying any of them is fundamentally the same. As a store of value is at least the thesis. What I'm against is gold going up in such a violent way without any real clear catalyst and causing lines around the block for people to buy and sell gold. I saw people on social media that were melting watches and whatnot just for the metal value of the gold.
Yeah.
So it's just, I think that's the thing that is that euphoria that drives a lot. And it's the same thing for a stock, right? If I see a stock, open door goes from $1 to $10, I'm like, okay, cool. You got to short that soon, because at the end of the day, there's going to be some, if it goes up for irrational reasons, it's sure to come down to reality sooner or later.
Yeah, and that's like anything. It trades. It trades a little bit differently. Of course, in equities, usually it's less volatile. But anything that's running, even tulip bulbs that run hot, euphoria can cause it to do a blow off the top. Maybe that's what we're seeing. It wouldn't surprise me if we've seen the all-time high for gold this year already set, and that there's some consolidation. And honestly, that's a really healthy thing too in any market. So. If that's a comment regarding gold, that's usually a sign when investor buddies like B. Martin says that his bro was starting to talk about, I'm presuming gold, that normally they don't talk investments. That's usually a time that if you're in the trade, maybe you want to think about taking some gains. Not maybe exiting completely, but yeah, it's the whole when your barber starts talking about Bitcoin and he's usually doesn't talk about things like that. Yeah, think about taking some gains. Nobody's hurt, and it's not financial advice, but it's okay to take gains, guys. It doesn't mean you're paper hands. It doesn't mean that you're weak or anything like that. And just take periodic gains, whatever you're comfortable with, depending on your goals. That way, if there is a big pullback and you're like, hey, I want more gold, you've suddenly saved yourself some money. You can get more, or you can use it for other opportunities too.
Yeah. Sorry, JPM lifts. Didn't mean to be rude to you. We've just had people in the past post fake stuff and just completely ruins the flow of the show.
Yeah. So I don't think you intended it, and you're welcome here, but yeah, we just don't want fake news. So Tevis, do you want to go ahead and go to Q&A, or was there another topic I think that you had?
Let me just double check. And maybe while I double check, you can answer this. So this comment says that, hey, it's definitely not retail that's driving the gold price, US Treasury dumping. Do you think that there's deeper macro and more importantly, geopolitical factors at risk here with regards to the gold price?
So I think Cheese is right that the biggest driver is the, as I said before, governments, and treasuries of other countries. China is accumulating a lot of gold. A lot of people are saying, well, what's the plan here? What are they doing? I'm sure we'll see at some point. And there's a lot of people that love stockpiling gold as well. But individuals absolutely can contribute. And when you've seen a big run, that's when, it's the classic thing of when retail is coming in, buying it hand over fist as much as they can. That's usually a sign that things are a little bit heated. So, it wouldn't surprise me. So again, I think maybe we've set the high for the year. We're close to the year anyway for gold. But it wouldn't shock me if next year we see it continue to go up. If they're continuing to stockpile, and we don't know that for sure on Fort Knox, but it wouldn't surprise me. But if we're continuing to see gold stockpile worldwide, silver may squeeze. I sold most of my silver, paid off some debt, put it in equities as well. But they've actually kind of bottomed out as far as the supply that was available. The easy silver, anyway, from some refineries. Part of that might have been Diwali anyway, that they celebrated on Monday for India. Big silver buyers, but it's crazy. Like if you told me like precious metals were going to be the trade this year, like what are you talking about? Obviously, other things have done well too, but
1.71 trillion. That's almost the value of all of Bitcoin. Bitcoin's like 2.1 trillion or something. And like, it's crazy. It was liquidated from gold today. So yeah, I mean, like I'm not against it going up. I just think that it going up for no apparent reason in such a parabolic way is a trigger of euphoria, and euphoria is a trigger of somebody holding the bag at the end of the day.
Yeah.
So here's what I want to talk about. I remember.
Yeah.
Okay. I mentioned this a little bit on the After Hours show, but since not everybody has access to that, love this question. Why buy precious metals? You can buy Bitcoin. Let's answer it in just a second. Okay. Did you see any of this? So somebody started Alpha Arena, where basically they put 6 AI LLMs. They gave them $10,000 each, and they're essentially betting on crypto markets. They're not talking about stocks. And yes, I will talk about Nebius because there's some questions there.
Dictator shirt.
Yeah. We are some very rude Koreans. Okay, so there was a proof of concept of this where somebody did it with like $600 or $300 or something, and then they said, "Okay, screw it, we're doing it with 10 grand." And there's this website that you can go to. It's called n-of-1.ai, and it's tracking in real time what the positions are, and you can see the toast messages up here, how frequently these freaking things trade, and what their performance has been since October 17th, which is when this started, which is what, Friday? Yeah. And of course, they're trading over the weekend because it's crypto. Very, very interesting to see that what their strategies are. So you can see here that like, which one do you want to see? So DeepSeek is long everything. GPT-5 long everything, short Solana. Grok is now long everything. And it was interesting because like you can see them switch in real time, obviously massively levered up, all of them.
No, these are just crypto, not equities.
This is just crypto, not equity. What I don't know how it would work with equities because you would need like a full broker and it would just be like so difficult. ChatGPT sucks at investing. DeepSeek has been in the lead for the longest time, followed very closely by Grok 4. Elon also commented on this, basically just laughing because somebody responded saying, of course, Grok is the most degen one of all, and Elon like retweeted that. So really interesting to see. Of course, they're trading a little bit in unison because of the market, but yeah, you can see completed trades, P&L. When they entered, when they left, like holding time, 1 hour and 36 minutes on ETH or whatever the case may be. What do you make of this, Roy? How fun is this?
Yeah, I mean, like, it looks like ChatGPT might go to zero. It's pretty funny, but yeah, it's too it's too early to actually be conclusive on this. You'd have to see this over multiple months, but yeah, if one of these models or several of these models do quite well, there might be some people that actually follow or build products based on that, which I think is pretty dangerous for many people to use. I don't know. I don't think that'll replace like the algorithms. Those can be very sophisticated that are out there. But it may be something that's a layer on top of an algorithm.
Yeah, dude, look at this. They like are explaining their positions. So like you can fully go into their rationale on like why they made any trade.
Oh man. Wait,
This
are those zoom in on the very bottom? Are those numbers in the 4,000s and 3,000s for those two models at the bottom?
yeah.
So they've really wrecked themselves.
They all started with 10. These guys in a weekend have just toasted their portfolio.
Yeah.
Uh, but like, dude, isn't this like this guy? DeepSeek and Grok were both at 15K earlier today. When I last checked, it's just cool, man. Like this is my quant.
Yeah, that's fun. No, it's something to keep an eye on. If it falls off my radar, remind me of this, please. But that's cool.
This is the reason why I like this, Roy, was because it reminds us of our leaderboard. And if you will remember our leaderboard, we have a common winner, and that is, of course, an LLM.
Yeah. I'm not doing so well there. So,
No,
was that from
I
today?
fell off the grid.
Is that updated?
This is live.
Oh man, I was hoping. Yeah. Lululemon's up a little bit, so that's is not quite the dog that it was before. But yeah, my hymns, of course, and we'll talk hymns here. There's some questions in the Q&A. It's not been the pivot that I was expecting out of that company. Most everybody else's number one draft pick worked out really well. Still would not be doing that great, but yeah.
So there you go, ladies and gentlemen. There you go. Yeah. Oh, thank you, Brock. Thank you, people following. That's very generous and kind, and I appreciate it. And I'm gonna invest all this money with DeepSeek. Apparently, um, thanks, Brock. Appreciate you. Yeah, just copy Nancy. Got to make an inverse ChatGPT model. Roy giggle like a cutie, though. Wow. Thank you for that, Pronger. All right, shall we go into Q&A, Roy? What do you think?
Yeah, let's do that. Yeah.
Yeah, the super chat matches my jersey color.
Very nice.
Same.
And by the way, as we're going into Q&A, if you haven't already asked a question, feel free to throw one there. We've got 24, it looks like, marked. We'll add some as well. These will be a little bit more condensed, usually rapid fire, unless there's one that we really want to hit. Feel free to add some more too. Thanks for that comment, by the way, Steve. Watched I Was Wrong Today, Roy. Try being totally perfect from now on. Yeah, that'll never happen at all. And there's times if you're holding stuff out, you don't want me to be right. Usually when I'm wrong, it works out well for me because it's a position I'm in, and also for others too. So, but yeah, never stop learning. Thank you, Paul.
We did cover this earlier in the show, so definitely towards the beginning, actually, we covered this. All right, 24 bookmarked questions. Let's get right into it. Thank you, everybody, for watching. It's been an hour and 10 minutes on stream, and we're just doing our questions. Please like the show if you like the show. Share the show if you want to share the show. And if you don't want to do anything, just sit back and keep watching. Okay, you still holding hymns? Yes, I am. I did make a trade today where I cut my hymns leaps. I also cut some of my hymns leaps when we rallied up to $60, and we're going to talk about that. But I cut the remaining of my leaps today, and I bought Nebius shares with the proceeds. I made a post on X about that. And as I've mentioned in my monthly post, so I posted on October 1st of my portfolio update, thoughts of what I want to do. One of the things that I wanted to do in October was cut my exposure on options, because we might have more volatility in the markets as a result of geopolitics, and I didn't want as much exposure. As well, I think HIMS is a little bit more iffy right now than it was in the summer. I think the missed revenue of that last earnings sort of opened a little Pandora's box for them of uncertainty and doubt. And I also didn't like the CEO's actions. So we're going to talk about all that because there's a whole bunch of other questions around that. But yes, I am still holding HIMS. It's about, let me check for you in real time, 6.9% of my, about 7% of my portfolio. Roy is also holding HIMS. It's about 2% of his portfolio, I think, Roy.
Yeah. 2.5, I think. Although it's fallen since then, and other parts have risen, so probably closer to 2 right now, which is not. My initial positioning was about 10%, and it ran up hard, and I took profits along the way, just because in a short squeeze, you got to do that. But I'm where you are with him. So we've talked about it before. This shows real quick. Looking for this. This was the breakdown of my portfolio that I'd thrown out there. And I've got a video on it if you guys want to know, just a little synopsis was what I posted next. But you can see how small Tesla is, and then my second smallest position is HIMS. I still think it's a next year story, and I'm happy to hold the position that I have. If it sells off or it continues to sell off in weakness, and I like the earnings are good, I like what I'm hearing as well, I'll be happy to add. But it could also be that we see more missteps like what the CEO did, which I don't think is like the hugest deal in the world, but it still doesn't sit right with me. As far as his comments regarding a short squeeze or, little emoticon, and then had a planned sell the day after. It's like, don't do that. So we'll have to see. But there's a lot of things going for them that start really in January or accelerate into January, which I don't think will be there on Q3. I don't think it'll be a particularly good quarter for them. It may actually be a brutal one. And if so, that'll be an opportunity, I think, to add. We'll have to see what those numbers look like.
Yeah. And I think also, put as much or as little credence to this as you want. But if you also look from a technical perspective, I think that you have strong support in the low to mid 40s. So I think if we dump on earnings, we will definitely consolidate there before moving up higher. So anyways, what happened to HIMS monthly? I think our sentiment on HIMS sort of fell in conjunction with me not being in the country or continent. And so time zones didn't match up for that month, and we just didn't really pick it up afterwards. We might honestly cover HIMS earnings if there's interest from Roy and from Nate and Elijah and others. So, but I don't think it's one of those names where doing a weekly show, like some weeks there's no news. And then also, like I said, I think the last earnings sort of opened a little bit of a Pandora's box of doubt in my mind and in the minds of a lot of retail investors on HIMS. Like it moved from a strong buy to kind of like a hold for me. And just to wrap up this topic, when HIMS moon at some point in the next 5 years?
Yeah, like 5 years out, I think that they'll be in a good place. If my thesis changes, like if at some point, and I'll do this with any company, if the bull thesis is no longer there for me, or it's pretty weak relative to some other company that I want to be in, I'll get out. And I've done that before. But my position is sized according to my conviction in where they are right now. Now, they are still heavily shorted. Short interest is over 40%. So there could be a catalyst. Of course, website numbers are also not good too. I don't think that there's a lot of high expectations, but year over year, there's going to be some slowdown relative to their growth. They're still growing, but it won't be like triple digits anymore. We won't see 70% year over year growth. So yeah, we'll just have to take that in stride. So could happen anytime, probably next year.
I also think this was like super brutal. And like, yes, Chris, they were preset sales, the 501B, whatever sales. But at the same time, like two things. Number one, as a CEO, he would internally be pushing to launch the new menopause products the same week that he has a sale. Like obviously he knows he's going to sell and like that the sale date is coming. So he's going to be pushing to like pump the stock ahead. And then I think responding. So basically what happened is they launched the news And then Antonio Linares posted that HIMS is going to burn the shorts because HIMS went up 20% in a single day. And the CEO, Andrew Dudham, retweeted with the eyeball emojis, basically, in agreement that, like, yeah, we're going to burn the shorts. Whatever. And then 24 hours later, it came out that he had sold shares as part of his sales plan. Now, some people might call it, hey, he's just tactically inflating the stock in the short term to get the best exit price possible. Other people might call it disingenuous, and it kind of rubs them off the wrong way. And so I'm sort of in the middle. I don't love it because, I mean, anecdotally, CEOs that are focused on short sellers and analysts and all that and bashing these critics tend to not be as focused on the actual business. Usually, like, from a founder, I would have a little bit more leniency, and Andrew Dudham is a founder, so that's why I'm sort of in the middle. But I also don't think it's a way that a CEO should behave to encourage long-term, investor mindset. It's just not a good look. Roy, anything to add there? I know you touched on it earlier.
I mean, yeah, it's everything you said is exactly what I feel with it. Initially, I thought because it was planned, maybe it's not as bad. I'm like, actually, no, it's maybe worse. Either way, it's not good. It's not a good look. I rarely want CEOs to talk about the share price. There's times when it's appropriate. Don't do it the way that he did it. It just, but he's young. He's
28.
A lot of things as CEO. So
he's 20. He's Amit's and Tanner's age, by the way,
which is insane. Yeah.
So,
I think he could be a very special CEO, but he's got things to learn too.
Yeah, I mean, I get it, but I don't necessarily love it as a shareholder. It was also something that I considered when I sold the, options in HIMS. Obviously, the options in HIMS were up like 200% because they were like $30 calls for 2027. I could have held them and made way more money probably. I just didn't want to really hold through months and months of further volatility. And so I wanted to limit that exposure. And I just feel more confident in Nebius right now, which brings me to this next question. I feel super good about it. I think that Nebius ran quite hot, jumping from $70 after announcing that Microsoft deal, from $90 to $110 and then running up to $140. Now that we're back to 100, I bought shares today. And I've been buying I bought shares in my aunt's account yesterday. So I think if we fall under $100, like, Nebius is going to be well set up. I think if you agree that this AI thing is not a bubble, well, Nebius is a company that they're only $26 billion market cap, and they're signing these mega deals. Management has said that there's more deals in the pipeline similar to that Microsoft deal in the same sort of caliber of partner. I wouldn't be surprised if I woke up tomorrow and I saw OpenAI or Nvidia had partnered with Nebius. It wouldn't shock me at all, quite frankly. And so I just think that we're still in the early innings with this company. They have like 200 plus projected growth rate for next year. So it's super, super early days.
Yeah. And I like Nebius. I did get out of that. I just rotated that into Nvidia. Obviously, it's not done as well, but no, I'm at the point, honestly, Tevis, where Nebius is one of like about 5 or 6 companies that I'm like, that's still very much on the radar. And I would love to have a piece at a certain price. I don't think Nebius is expensive here, even though it's a lot higher than when I sold it. So,
yeah. Would you ever consider getting back in? And what would need to change?
I think it's more just lining up with opportunities. If I'm seeing fewer opportunities, I need to pivot away from fintech, which I probably need to, just because, like, doing my portfolio review, I'm like, I'm so heavy in fintech, which is not a place. Not every name that I'm in would be impacted by crypto winter, but a lot would. So I'm like, I need to probably position myself so I'm a little bit more diversified as far as some different sectors. And Nebius is in a space where I wouldn't mind being in, and I like them a lot better than CoreWeave. I think CoreWeave will be fine too. So yeah, just if there's a time to pivot, and I'm like, hey, wherever I'm pivoting away from there, or where I'm pivoting to, that there's no better opportunities at the time. So, but I mean, for the most part, I'm almost fully invested. I'm like, what is it, like 2% cash? So I'd have to sell something. So more would be either taking massive gains on something. I don't think I'll have any big money coming into the market until January, really. There'll be chunks here and there, but so, or my conviction changes because of an earnings. That could happen.
Funny enough, Roy, Nebius is now, after this latest purchase, my third largest position. So, of course, cash is second. I'm not counting it as a position, but I have SoFi, I have cash, I have HIMS at 6.9%, and then I have Nebius at 6%. It just crossed Bitcoin, which is about 5.5% for me. So, yeah, it's definitely getting up there in terms of the value. It's going to be really interesting to see where it goes. Okay, let's move on. AMD or Nvidia, or just both with heavier weight on Nvidia?
I prefer concentration. I think Nvidia is a clear leader. AMD is very good, very solid. It's not wrong to diversify, but yeah, I would just pick Nvidia.
I would agree with that. Thoughts on Grab?
I think it's a good, solid company. It's very different than Amazon, but it's like Amazon in my mind, where I think it will be solid and give solid returns, at least at the market rate, if not a little bit higher. They're international, so there's some things I don't understand. They're doing micro lending. I have no idea what that actually looks like in Malaysia or anywhere else where they're positioning, and what would happen in a downturn. And frankly, I don't think that they do either as a business. I could be wrong on that. It's also a conglomerate, which I tend to not like those as much. Although, ironically, I'm in Tesla, which is really a tech conglomerate, and I was in Nebius, which is a conglomerate. But so I think that they're a good company, not a great investment, and I just prefer concentrating in great opportunities. So I had a conversation today where I was talking to somebody about this, and there's probably like 25 or 30 companies that I'd buy over Grab right now, which doesn't mean I think Grab is terrible. I think it's just okay.
Yeah, I know very little about Grab. I've never really looked into their investor materials nor their financials. The only thing I know about Grab is that they're like an international Uber/Uber Eats type of service out of Singapore or some maybe.
I think they launch out of Singapore, might be based in Singapore. I can't remember, but yeah, they've spread massively. There are some places where they didn't succeed in spreading. Little teaser, they do have a wallet that is, I wouldn't say dominant, but it does quite well in the region where they're at. And it wouldn't surprise me if we see a headline late this year or early next year of Grab joining the PayPal World wallet ecosystem. It'd be an interesting headline.
Yeah. So long story short, I don't know enough about them to have an opinion. Gold tanking, we talked about this. Amazon has quite a high PE. Google and Meta is cheaper, right?
So PE, like
price.
A lot of this has been Amazon driving forward capital expenditures more rapidly than they expected during COVID. They've continued. Part of their continuance, of course, is because of this big pivot towards AI and what they're having to build as far as infrastructure. At any point, if they're like, okay, let's raise prices a little bit. They've done this on Amazon Prime. People are happy to pay that raised price. They are. We've not seen any deterioration on that, just because it's a product that people feel like they must own. When you have that kind of positioning and moat, and like you're a very good, solid company, they could also drive up incremental take rates, and they would get a little bit less traffic, a little bit less volume, but they'd make a lot more money. They also can say, hey, let's slow our roll on CapEx. And so all of a sudden, any of those things, and maybe they do all three, suddenly that PE looks absolutely ridiculous and rosy. So I would focus more on like the revenue as far as Amazon. I don't think that they're optimized like some of their other peers for earnings necessarily at this point. And Matt's comment too there at some, yeah.
Amazon also has a lot of depreciation, which is a non-cash event that impacts net income. Cash flow is a better measure to compare the Mag 7.
Yep. Yeah, I agree. And I'm not bullish. I'm not super bullish on them. So just don't underrate them. They're a good buy here. I just think that there's better buys.
Yeah, I wanted to bring up a certain comment. I just have to find it. It was about Tesla because it's relevant. Anyways, I'll find it eventually. But basically, the question was around Tesla and the Department of Transportation, because Elon tweeted. Basically, there was this tweet that Isaacman had been blocked several times for his NASA position, and one of the person that had blocked Isaacman was Sean Duffy, the Secretary of Transportation, and Elon corrected his name to Sean Dummy. And well, would you know it, Roy, that I just happened to see this post. Elon Musk is no longer following Secretary Sean Duffy. So, Secretary of Transportation, and why would that matter for a company that's doing full self-driving and trying to get approval across the board? I don't know. We'll see what they say tomorrow if it's asked. In terms of the, like, if Elon's mercurial or outspoken nature, let's say, has a negative impact on their ability to expand into other states. Roy, any thoughts there?
I mean, it's obviously Elon. Like, the nice thing about Elon is you don't have to guess what he's thinking from his actions and the way he's talking. Obviously, things are not good there. So, yeah, Elon's caused himself some of his own problems we've talked about in the past too. But yeah, nothing else really to add there.
Okay. Do you think Tesla should team up with another AI company? Seems like they're falling behind. They almost see minor league players in the majors, in my opinion.
I think for them in their ecosystem, they don't need necessarily the best of the best top line. They're certainly not going to partner with OpenAI. See that the way that Elon regards Sam Altman. So, maybe at some point they'll partner with Anthropic if they really want to focus more on the coding side, or Gemini, Google. That would be an interesting partnership. But I think Grok is probably good enough for what they are wanting it to do, and they can add some guardrails if they need to, just to really hone in on implementation there within the Tesla in the future with robotaxis and also with Optimus.
Yeah, and like, I don't know what you mean, Matthew. Like, team up with another AI company like XAI, the company that they're literally trying to team up with if they get shareholder approval?
I think he means other than X.
Oh, well, I mean, I think X would be sufficient and the easiest to integrate into their ecosystem, given it's like the same team of people or under the same, Elon Holdings conglomerate. So I don't know. I think that's like the low-hanging fruit there, but only after they've crossed that option off that it's not sufficient would they be looking for another AI company. Is my 2 cents. Okay, here, Matthew Johnson, I guess, clarifies. Wouldn't Tesla need a better AI than Grok? If Optimus comes out first, but the AI capabilities are a laggard, is it a first-come market advantage?
I mean, like at that point, I think two things. One is if for some reason Elon Musk is kind of no longer there, he's retired. I don't think that'll happen. This is probably at least 5 years out. I think the next guy will probably say, yeah, let's partner with Gemini or something like that. If Elon Musk is still there, and that very, very likely he is, he will correct this issue. Likely before, but also like when they're getting flack, we can see what he has led teams to be able to get done in a short amount of time. That's seems frankly not humanly possible. He's done that with many of his companies, and I think would be a case where they'd say, "Hey, this is not nearly good enough. Let's burn it to the ground and fix it quick," and it would get done.
Yeah, and so what I'm seeing in the subtext of this question is that Matthew is saying, "Hey, Grok is inferior to other LLMs right now," and like, sure, we can argue the merits of that as a standalone. I do think that when Optimus ships in volume, it's going to become very similar to how the iPhone was, where it becomes the hardware, and it's like, well, Google is now bidding on a contract to be the default search engine, or other companies will bid to become the default app store, or whatever the case may be. So the point being is, like I've said in previous times, multiple times in the past, that the iPhone is the Trojan horse into the household because everybody has one. So too will the Optimus be, because the Optimus is going to be the hardware device that you put into your household. And if I was Google, I would want to do a deal whereby, hey, every conversation that people have with their hundreds of thousands, if not millions of Optimus robots in the circulation, I want it to be training my LLM versus somebody else's. And then if not, why can't I, as the consumer, choose what LLM software I want to be running my Optimus? And so I don't know what the answer is going to be. Something in between, most likely. But the point is like, similar to Tesla's, how now it's like, oh, we should license FSD to other hardware manufacturers. I think it's going to be similar with Optimus. Like, it's a hardware device, and other companies will be wanting to be the software layer of that. And I don't know if DuckDuckGo is even, or will still even be around, but that would be interesting for sure.
We'll see. Okay. Yeah, I actually use DuckDuckGo occasionally when I'm like, whenever I do any research with hymns, for instance, I'm like going to DuckDuckGo. I do not want those ads. Now, the weight loss one I could probably use, but the rest is like, I don't need it. I don't want it. I don't want that showing up when like I'm showing something to my kids or my wife. So, yeah.
Is it too late to start a position in SoFi?
No. I mean, with great companies, and I think SoFi is at the very least a very good. I think that they're probably going to be a great company. There's no point where it's like saying in 2012, is it too late to invest in Amazon?
Mm-hmm.
What are we talking about? SoFi, there's so much more market share that they can capture, even here just in the United States, even assuming that the fintech or AWS of fintech dream is dead, which it might be. I think it's too early. Like, we really need next year as a data point to really see what they're able to do in a year's time. But no, if I didn't own SoFi here, I would be buying.
Yeah, I mean, I literally started it as a position in my aunt's portfolio like 2 weeks ago. So like I think she has a cost basis of like $26.50 or something like this. I don't think it's too late. The company is not showing any signs of slowing down. In the contrary, they're showing signs of speeding up. So, and I also personally bought SoFi at $25, and people were saying like, "Oh, why would you buy it? This high?" It's because I think it's going to go higher, and I think that the company is going to do much better than they are right now. Management feels energized. I agree with this. $30 feels like the floor after earnings. We'll see, of course.
11 is the floor.
But yeah, I mean, 0 is the floor, technically speaking. But I do think we are primed to be going higher. And so, obviously, where's my banner? None of this is financial advice, but personally, I've been a buyer over the past month. I've been a buyer over the past week. So.
Yeah. And I mean, you only really need to look at this. This isn't the only thing, but rate cut probabilities. Like, we're cutting rates. You can look at it next year as well, which is less certain, but that's very bullish SoFi. They are more than just a rate cut story, but they certainly are. And there are still aspects of that business that not much is happening with it, just because the way that their cycles work. There's going to be some parts of the business that are doing great, while other times are not doing as great. But I mean, they're just resilient. So, yeah. Well, and if you're curious on this too, by the way, On Friday, FinTech Fridays, we talk a lot about SoFi. We'll do an earnings preview for SoFi. So just listen to what we say. Take it with a grain of salt. Do your own research as well. But yeah, we are seeing a lot of upside still with SoFi. Now, maybe we've topped out at the year. That's fine. It's been a great run. Next year, massive, tremendous tailwinds as well. Not financial advice. Thank you, Tevis.
What happens if you guys say this is financial advice? I mean, like, if somebody loses money and says, "Hey, Tevis told me to buy it," and points to this video, and I say, "Hey, this is financial advice. Do this and that," like, I don't know if that could hold up in court, but I don't really want to test that to be holding up in court because I don't have my license to be a registered financial advisor. So that's why people say, like, "Hey, not financial advice." In other words, if you blow up your account because you're being an idiot, that's on you because you're an adult. But it's the same reason why you go to Starbucks and you get a hot coffee and it literally has there printed, like, "Careful, coffee's hot," because people have burned themselves and they've sued Starbucks and won. So now you have all of these like silly disclaimers and rules. Okay, let's see here. Did SoFi announce an East Coast HQ expansion? Yes, they did. Over 200 jobs. Roy, anything to add there?
I mean, East Coast is the capital of finance, so it makes sense. They're on the West Coast. That's probably disadvantageous at times. So, yeah, it's good.
Yep. You guys kill me, man. Interesting what their Q4 incentives Tesla will give if their margins will hurt.
Yeah, I mean, between that and then the new cheaper versions of the Tesla as well, we don't know what the margins are on that. So we'll have to see, and maybe they'll comment on that in the earnings call itself. They may roll out a lot of incentives beyond that too. So good thought.
What's the intrinsic value of ETH or Bitcoin? 0. The intrinsic value is 0 because they do not produce anything.
Oh, and I don't think we went back to that. Why would you invest in precious metals instead of just cryptocurrency? Well, it's part of that.
Great question.
There we go. So for me, I own both, and I see both as a hedge and a store of value. The thing with precious metal is it's a proven hedge. It's a proven store of value. I mean, you can look back 2,000, 3,000, 4,000 years ago and see, by and large, precious metals, silver and gold mostly, but there are some others as well. Tin was a big one, by the way, for a while. Bronze as well. And iron. Oh, man. I'm going to do a history rant, so let me avoid that. But it's a proven concept. It'll continue to be a store of value for a long time, and there's real use for Bitcoin and silver. Now, Bitcoin we call digital gold because it's not the best as far as using for actually spending.
Are you guys seeing this? What? Is this just me? Or okay. Okay, it's not just me. Yeah, probably a power outage. That is Roy's new profile picture. I'm probably gonna get a Twitter message with Roy saying he cut out. Wow. Yeah, I just got a Twitter message with Roy literally saying power just went out. I'll even share it with you guys if you don't believe me. Called that. There you go. Power just went out. This is what happens when you live in America, guys. You gotta live somewhere where you have actual predictable energy. Let me fix my camera. Okay, so I will take the questions from now. Roy's channel, if you're watching, this is fun. Yeah, now we know what Roy looks like drunk. It's raining in Houston. Yeah, gonna make a hate post. Roy drunk on Bootleg Weekly. How dare he? Financial advisor drunk on show where he's giving financial advice for over an hour. Tevis, have you ever considered doing content full time? I have not, because it's not financially viable. I'm not a big enough creator to make it financially viable. So I also don't really want to taint it by ruining something that I do for fun. At the same time, like I made a post today saying I wish some days that I could do it because I feel like I miss out on a lot of news because I'm in the office or I'm focused on, like today we're focused on 2026 budget, and I was just heads down on like my own, research, and like I'm missing news left and right, and it kind of sucks. But it is what it is. I mean, eventually, I think YouTube is going to be a predominant source of income, but that's only if or when I retire or semi-retire at least. Um, and unless, like, I think unless the channel goes to, like, I think where Tanner is right now would make it viable at the very minimum. But yeah, nothing, more than that. I could see, the thing is, I want to do it where the income I get from YouTube is the income that I live off of. I could obviously live by selling options, but I don't really want to do that. And yeah, exactly. I don't want to make other content. So yeah. Okay, something is happening because my thing also went down. Is AWS down again? Okay, this is a Roy question. We'll save it for when Roy is back. I think he should be back at some point. Looking back 5 years on Lemonade, it was valued much higher. What happened and why didn't it recover after 2021? Yeah, so they went public. I think it was a SPAC, but I could be mistaken on that. They went public in 2021, and like everything in 2021 that's speculative and non-profitable and small cap, it was bid up like crazy as a result of the insurance total addressable market being gigantic. And it went to like $300 a share or something like that. And then it completely collapsed to, $13 a share. And now it's back to $50 a share. So I think a lot of businesses had to do that. I mean, we saw that firsthand with SoFi, where they were basically in the mid 20s and they fell all the way down to 4 as they grew into that valuation. And now that SoFi is back to the high 20s, $28, $29, nobody is thinking it's going to go back to 4. Why? Because they warrant that valuation now. Whereas 4 years ago, they didn't warrant that valuation. They were just overvalued, right? So it was a lot of fluff. So the same thing happened with Lemonade. Same thing happened with a lot of companies that were more speculative, and we're seeing it now as well, right? You saw Open Door rally. You saw Beyond Meat is rallying recently, and you get that sense of euphoria coming back into the markets because people are going more risk on, and as a result of going more risk on, what's happening is they see people around them making money. Sharing screenshots, sharing their portfolio updates on a frequent basis, and they get FOMO. And as a result of that FOMO, they want to make money faster, and they take on more risk. And as they take on more risk, then I mean, like I showed you the pictures of people lining up around the block to buy gold of all things, right? So it's just the same macro patterns that are repeating that happened with Lemonade 5 years ago, and they're happening now with different companies. Yeah. Do you guys like Nebius? Bought 10 more shares today. Congrats, Pronger. I really like Nebius. I bought more shares today as well. So yeah, we talked a little bit about Nebius. So that's my thoughts. I don't know why I'm so awkward on live streams alone. I think my content career would be much further along if I wasn't, but it feels much more comfortable when I'm making pre-recorded videos than when I'm actually talking to myself to 200 people awkwardly. Now that Roy is gone, can you tell us how you really feel about PayPal? Yeah, so PayPal, I mean, like, I'm not against the company, but I think the stock is somewhat of a lost cause, and I would be much more comfortable buying PayPal, giving up some of the initial gains. Like I'd buy it at like $85, ironically, or $90, because that would be somewhat of a confirmation that, hey, the market has started to wake up and we're going higher. Whereas if I buy it at $60, then I'm risking it's going to stay like that for quite a while longer. So I sort of want to buy it when the market starts to wake up, but at the same time, I don't follow PayPal on a regular basis. So yeah, I don't necessarily like. I think at some point soon I will get into PayPal because it'll be too good to ignore. I don't think that time has come for me just yet. Okay, hold on. Yeah, exactly. 2021 was crazy valuations. Embrace the awkwardness. Thank you, Matthew. Thank you. New here, but already value your opinion. Doing great. Thanks. If you like what you're seeing and you want more of this, then consider subscribing to the channel. Matt Money, I log in sometimes at 11:30 at night and see Cash Flow Chronicles on their third season, by the way, great show. And these guys are clocking in like 800 to 900 live listeners. So definitely don't listen to this guy when he says he only gets 40 people. He is lying. Although I did recently cross Matt in subscribers, and I will never let him hear the end of it. In addition, if SoFi closes above $25 at the end of the year, I will be $500 richer, courtesy of Mr. Matt Money. Did you get laser surgery? Yes, I did back in June. Honestly, one of the best decisions. Highly recommend for anybody. You should put up a picture of a call with others on your monitor to make you feel more comfortable. Yeah, I don't know. It's so weird. Okay, hold on. And Matt, by the way, if you want to hop on the stream, just let me know, and I'll flip you an invite. Okay, let's see what other questions we have. How hard will it be for SoFi to expand internationally? I mean, they already have a presence in Dubai, I believe. They also have the Hong Kong presence, and they have a Galileo presence in Latin America. So I think they can leverage those existing footholds that they have to expand further internationally. I don't think it's going to be super difficult for them to do so, but I also think that the value proposition is different in different countries. The purchasing power is different. The customs and inherent, established players are different. And so it's a different landscape. And I think they have more than enough market share to go around in the US. They don't need to worry about international penetration just yet. They're super, super tiny relative. I mean, if you think about 12 million members in the context of 350 million, people in the US, they still have a long way to go to penetrate more of that market before they have to look for international expansion. Although I do believe that it's going to be a serious conversation that they put on everybody's radar in 2026. I think management is going to talk about international expansion targets, probably expanding into Mexico or Latin America, and probably having a presence for internationally through Hong Kong or Dubai as well, because that's where they already have a initial foothold. Okay. Yeah, Matt, Tevis has surpassed you. Pack it up. You and Matt should buy call options next year. Winner that has the best returns takes both options. Okay, this is something, Matthew, and I appreciate you for throwing ideas, but this is something I wouldn't do because Matt was the one that tried to get me to buy Rocket Lab at $4 in February of 2023, and I was like, Rocket Company, I've seen how it went for Virgin Galactic, and I don't think I want to do that. And guess who lost out on a whole bunch of gains? This guy. Roy just tried to call me for some reason on X. He said StreamYard is not coming up for him. His power is going to be off until 1 a.m. And he says Houston is a third world city. Heard it here first. Well, simple. Event is tomorrow. I am hyped to see them innovate. Yeah, I have it open up on my other tab. It's going to be at noon Eastern time tomorrow. They're going to be talking about some new options trading features. Well, simple is basically the Canada equivalent of Robinhood. Okay, so that's going to be very exciting because they are one of my brokers. I also use Interactive Brokers and Questrade up here in Canada. Let's see. What is your favorite candy to receive on Halloween? I'm trying to save the important questions for when Roy comes back so we can have a conversation, but eventually I'll get to all of them if he's not gonna come back. What's your favorite candy to receive on Halloween? When I was a kid, Coffee Crisp was the best. And then from there it went to like Kit Kats. I never really liked the sour candies. Is that what they're called? Sour keys. But I really like the Coffee Crisp, chocolatey. Yeah, Coffee Crisp was great. Houston is a slightly smaller Mexico City, and I live in Houston. Well, this is good to know. I think Houston is one of the only cities that I have not visited in Texas. I did like a Texas tour back with Riley in 2021, maybe. Yeah, when Riley was still doing the show, and we went to Austin, we went to San Antonio, we went all the way down to Cape Canaveral to see the SpaceX launch. It was April 20th, 2021, maybe, because he did it on 420. And of course, Dallas, Fort Worth. But Houston, I didn't go to. So I think Matt just needs to invite me to Houston. I bought some Rocket Lab blindly because of Matt. This FinTwin circle is goated for stock picks. I never have to do DD anymore. Yeah, I mean, that's also a winning strategy. Like, she just buys everything that FinTwit community has advocated for, and that those have all done very well. I did something similar in the summer where I said I have an actual watch list on my Webull with the friends portfolio, and basically this is things that my friends are advocating for, and I just monitor that as well, and they do very well. Can Matt hop on and do his best Roy impression? I don't think he loves me enough to come save me from the social anxiety I'm having. So, but I mean, he's always welcome to come on. Michelle lives in Houston, says, bro, you missed brunch. But so did Roy. Something about work on a Sunday. Yeah. I think that's what people call an excuse, Michelle. LNG plays looking good. Yes. I bought a whole bunch of Next. So this is my retribution for not listening to Matt the first time around. I bought some Next because I think that they're going to be doing very well in the upcoming years when their trains go live and they start making some money. Okay, let's go back to the questions. Let me see. Hold on. As a percentage, how have your SoFi leaps moved, strike, time, etc.? I don't want to show you because that would be showing my account with real dollar values. But let me go into my spreadsheet and I can take a look. So I have, in one of my tax advantage accounts, I bought 10 contracts of $10 strike price January 2026s, and those are up like 800%. And then I also bought $17 calls, leaps again for 2027, and those are up 400 something percent. As a whole, SoFi leaps themselves are a whopping 1.94% of my portfolio. So those are like insanely, have been insanely profitable. The average return on the leaps is 682.7%. But granted, this is like, I was talking about SoFi. I've been talking about SoFi for 5 years. And so I was able to get the leaps when we were trading in the single digits for, 2 to 3 years out. So, yeah, that's why I right now have also BM&R leaps and Nebius leaps. And I just cut all of my HIMS leaps because those were up, 2 to 3x as well. Get Tanner on. I think Tanner has his own show going on right now. We always see a drop in our viewership whenever somebody from the community goes live because they're just bigger accounts. What's the year to date? I think I'm 77% year to date. I was 85, but now that Nebius dropped a little bit, I think my account dropped. If you could go back in time, would your Robinhood investment strategy be different? Yeah, dude. People were telling me to buy Robinhood at like $11, and I didn't listen because I'm an idiot. And then Roy like begged me on the day DeepSeek came out, and the entire market crashed the day DeepSeek came out, and Robinhood fell to $14, and Roy was like, "Please buy the dip." I bought SoFi instead, and that was like $7 or so. So I'm not like super sad about it, but yeah, that's how my strategy on Robinhood would change. Is I would buy it earlier. Thank God you're back, dude. Holy crap! I don't want to do that again.
Yeah, I got a call from. Sorry about that, guys. Hasn't done this in a while when there's like no storm or anything, and they're like, "Yeah, your power is going to be off until we estimate like 1 something p.m. like tomorrow." I actually heard AM initially. So thankfully, it's not that. It's back on, hopefully, for the rest of the stream. So now that you've answered all the questions.
You have to do a lot of talking because I am tired of hearing my own voice.
Okay, so what other questions, comments do we have?
Do you think CRM is a good buy right now?
No, I think it's probably a value trap. The reason why we say that, let's actually pull up a couple of things. Pull up visual stocks here. Let me share screen, and we'll do CRM. CRM and Adobe, I mean, they're very different companies, right? But like Adobe, I think might be a value, and CRM, I think might be a value trap. Now, it did spike up today, along with, like we talked at the very beginning, that there might be a little bit of rotation into value in these underappreciated plays. But if you look at CRM itself, like from a couple of things, you don't want to just look at valuation metrics. But is this a low PE ratio? Well, no. Like we talked about Google before. Let's pull it. Well, I won't pull up Google, but Google is actually trading at a lower PE. Forward PE looks incredibly attractive, like 18.87. That's great. Price to free cash flow is not the best, but I don't know that they're optimized for free cash flow. The bigger issue is nobody likes Salesforce. They just had Dreamforce. And oh yeah, here's the free cash flow right here. Immense amount of free cash flow, but it is mostly Q1. It's very seasonal as well. Are there products? Is their AI product actually good? Agentforce. They've announced it, and Benioff has been all over the place. That's really my biggest issue with them. Is they're a serial acquirer, and I don't know that that's good enough in the age of AI. Now, CRM is not going to go away. They're a very sticky product. I used CRM for 6 years when I was at a university, every single day, or almost every single day, not quite all. And some of the other Salesforce products too. Everybody hated it, but it was sticky enough that it made sense to use at the time. I think AI is going to be able to replace a lot of what Salesforce does over the next, it may take 5 to 10 years. Benioff keeps doing weird, erratic things. You can look at the comments. We talked about this, I think, before, Tevis, where he's taken aim at like Palantir, which is just weird. Like, what are you doing? He has pivoted massively they had Dreamforce in San Francisco, and he was talking not really trash about San Francisco, but he's basically saying, hey, the National Guard fully justified for being there, go to President Trump, which shocked a lot of people. And then after Dreamforce is like, nah, never mind. It's really kind of shocking. He ended up also, like, the bigger thing is he fired the lead team that was in charge of their agent force. And it was like their best AI team, their most competent one, most of the people there, because he didn't like what they said when it came to, he was portraying Agent Force as plug and play, you're ready to go in minutes. And the reality is that his team was telling these large enterprises that CRM works with, it is not plug and play. You need to have a thoughtful approach when it comes to actually be able to get the most value out of Agent Force. It's not necessarily as intuitive either. So it's going to take some time for ROI. And Benioff is like, these guys he called them crazy. He canned a bunch of them. He pivoted some others. He's now rebuilding the team as well. if it wasn't for the way that Benioff had been acting and is acting, I would think that Salesforce is probably okay and maybe a buy right here. Just because, I mean, they're not going to go away. I think it'll be a slow erosion over the next 10 years. They're not going to zero. But their AI product, I think, is pretty lousy. I think Benioff has no idea what to do when it comes to actually building a product. They're good at buying out other people, but there's really nothing on the market just to buy that will be a plug and play in their ecosystem. And what they've managed to build at Salesforce, it's impressive. But in essence, it's like, let's take a really good product here and here and here, and we're going to duct tape it in together. And that is if you know anybody that works on the operations side and works, as far as the engineering side as well, for any company out there that has to deal with Salesforce, ask them what they think about the actual product, especially when it comes out to rolling updates. You will be a little bit surprised if you've not used Salesforce before. It is not loved by them either. It's actually hated.
Yeah, that was a very well-structured answer. Okay. So let's see. If you have a call debit spread and it reaches the top of the spread, but you have over a year left on it, when would you buy the call you sold to turn it into a long call? If it has a year left on it, wouldn't you be like up multiples on your money, in which case you could just close it out altogether?
So the biggest fact, it depends on a lot of things. For myself, I usually let theta decay do its work when I do a vertical spread, barring something really strange. Usually, if so, like Nubank is one of those that I own. I've owned Robinhood vertical spreads. Do I have any others?
But if it reaches the top of the range, isn't it the theoretical highest that you can like?
No, because of theta decay, like it has to be pretty deeply in the money for the top range. The delta actually influences it most. Delta is the amount that it moves per each dollar move of the stock, and so your deep underwater covered call that you own, that you bought, that's going to be like a 0.999 delta. It's at a certain point. Versus if this just barely gets in the money, it's maybe like a 0.85 delta or something. So there's still some gain on it even as you go up. The bigger thing is also, unless it gets deeply underwater, theta is a big piece of that. And so basically you let the time decay play out for you. And so when I do vertical spreads, I plan to own at least for a year. Usually it's in my non-tax advantage account where I write these. I think, I don't even know if I can in my other accounts, but I plan to take advantage of long-term capital gains and also allow that very top call that I sold to burn out. Or if there's an opportunity where, like with Robinhood, that I had some vertical spreads, the price collapse. I didn't do this. I didn't have the money available. Well, I did. I just didn't do it. But that top covered call that you sold, you can rebuy that for cheap. I tend to do that. Otherwise, I just let it play out. Again, unless all of it goes really deeply into water, then I'm like, okay, there's not much more value to add there.
But wouldn't the theta decay apply uniform across the long call as well as the covered call? Because like, let's say I have BMNR 70, 100 and BMNR for 2027, right? And BMNR hits $105 today. Like, if I let that run out, then like wouldn't the theta decay be the same across both of those legs? Like, why wouldn't I just close it out the position altogether and take advantage of the additional time value left on it?
Yeah, my computer is not cooperating. It did not like that hard reset. You can do simulator returns if you guys have Robinhood Legends. I think that I've got it now. It's just slow. If this is like really lagging.
I have spreads on BMNR, I have spreads on UNH still open. So this is actually really interesting.
So here we'll go January 21st, 2028 on Lemonade. I don't own any of these. I don't have a position in Lemonade. But let's just say, hypothetically, it usually takes me twice to do it right. We're going to buy the call option, hypothetically, of let's do $60, and we're going to sell the $90. And let's do then simulated returns. And so simulated returns, we can change just the IV. We can't change theta. But if you look at time, over time, as it goes, there is a max limit that you can hit just because of the nature of, but you can see the variables here. I don't know if it's too visible. Maybe I can close this. Nope. Probably have to zoom in or out. Let's try that one more time. Buy 25, sell 1360. Wish I didn't have a potato of a computer. Simulate returns. And yeah, so as we're looking, you can see here's delta, theta, gamma, and vega. Delta is the amount that it changes for each dollar that rises up. This is the overall contract, so it's not actually simulating both legs. It would actually kind of be useful if it did. Theta is very negligible until you get really close to time. Now, the exception is your theta decay, which is your time decay on the value of the contract. It becomes insignificant when you're deeply in the money. It makes they're still there, but it makes almost no difference. So, like the ideal scenario is you get like right under or close to that higher call that you sold. So going back here, we can see $90. If it gets to like $89.99, but if it does it right away, as far as the price, so you can see the price right here. Let's see, I haven't used this since they've updated it actually, but we can increase the price here. Let's say $70. And as we go through time, I mean, that can change things immeasurably. So let's go with high. My computer's lagging, so it hates. Like StreamYard is a problem. I don't know. We got to find something better.
Your mic just changed. Okay. I can hear myself echo, so you might want to lower your volume. Okay, so let's mute Roy for just a second here, and then we'll wrap it up real soon, guys. I think that's like we've been on for 2 hours. There's still more questions. How many times have I thought in the last 10 minutes of faking my own power cut to explain the solo stream? Like nonstop, Steve. Thank you for asking. Other than Investor Day, what's the best source for Lemonade? I would say Paper Bag Invest on YouTube does a good job. He is like we are for SoFi, but for Lemonade. So just go to Paper Bag Invest, and he does some good stuff on there. We answered this. Thoughts on Applied Digital. I haven't really looked into it. I don't think Roy has at all.
I don't know that one. No, I mean, I know of it, but nothing.
At this point, doesn't it feel like the market needs to go down after his 3-year massive bull run? It's like they're just waiting for a catalyst. Even a single peak can trigger a drop. Yeah, I think there's short-term local tops that are very volatile to tweets and other factors that it always feels like we're toppy. But I think over the medium and long term, a lot of it is going to be warranted in the innovations that we're seeing with regards to AI.
Yeah, I agree. Like local top, maybe it wouldn't shock me if we see that in January with some people waiting to take profits in the new year just because of the tax event and the timing on that. Especially if earnings season is good. Usually there's a Santa rally too, and crypto seasonality is very good as well. There's a lot of real reasons for this 3-year bull run. You look at actual earnings, we're not, there's some stocks that are elevated. There's some that are downright frothy. That doesn't mean as far as the overall market, it needs to go down. But in a bull market, you're right. There are 10% or higher corrections quite frequently. It wouldn't be shocking if we get another one of those early next year.
Okay. Maybe like 2 more questions. And I know we have 9 bookmarked, but 2 more questions and then we wrap, guys. And if I haven't gotten to your question, I apologize. It's just there was a lot of questions asked. Roy, do you think Palantir's Q4 numbers will be hit due to the government shutdown? Real quick.
No.
You can be a little bit slower than that, but no.
If you look at where they aren't actually able to pay versus contracts that they need to pay out, I don't think that companies, I could be wrong, but that they have contracts with Microsoft, Google, Palantir, Snowflake, that they are not going to see their revenue in quarter 4. There is a possibility, but but we've not seen that in any shutdown, and so I'd be pretty surprised, especially given when the shutdown actually happened. Because I mean, there's a lot of time left between now and the end of the year. I don't think the shutdown's going to last that long. It could last a couple more weeks, but that's not through December.
Okay. Roy, you have a request for AEHR. Definitely follow Roy's channel for that. I will not be covering AEHR, so Roy is the next best on the street for that name. If you put a gun to my head and asked me like, hey, Tevis, explain in detail what do they do, I'd be dead. And you've explained it to me multiple times on multiple streams.
Yeah, and there's still things like that. That's new enough that I've put in a lot of research, but there's still things. When I'm newer in a stock, it usually takes about 6 to 9 months for me to get up to par, like where I'm comfortable talking about it a lot. Era put in a lot of time, but there's still things that I'm like, oh, I got that wrong, or oh, I didn't realize this. It's interesting.
Do you guys have thoughts on Adobe at current levels, or is it too boring for your wild growth blood? I do, and I like. Let me get started on this question. I fundamentally think that Adobe has, and I think I might have shared this with you, Roy, or at least in our group chat. But there was this post I read recently that Adobe has like alienated an entire generation of creatives as a result of them being super predatory with their pricing and how they do their plans. They do monthly plans, yearly plans. You can't really cancel. They lock you into this ecosystem. And I understand it from a business perspective. I just think that the user experience is absolutely limiting. And if you were getting like this amazing service that keeps getting better and better, like that's one thing. But I work with Adobe on a daily basis. Teams do. And it's just not like, it's not a superior product offering, but they do have a monopoly. It's like saying, oh, well, you work in finance and you can't use Excel. Can you still do the job? Yeah, of course you can. But like Excel is like the default state, right? Whereas in the case of Excel, you can always switch to Google Sheets. You can switch to, whatever Apple's one is, but or something else altogether. But for Adobe, you physically can't. Like, there's no real alternative in the market. And so I think that with regards to Adobe, like, you might be like, oh, well, looking at the financials or where the stock is trading, you might see it as like a value play. But I lean closer in the direction of it being a value trap. I think it's down, like 30% or so on the year. I might be wrong about it.
It's recovered nicely over the last, because of that rotation that we talked about. It was down to 329. So it's bounced up a lot. It's down 19% year to date. Over the last year, it's down about 30%. So you're right on the money there. Over 5 years, it's not been pretty. From its peak in the 600s, it's down 43%. This is from like early last year. There is a perception, I think it's partly right, that Adobe is being disrupted by AI. There's of course Figma that they tried to acquire, and that was broken up by not allowed by regulators. Would have been a really good thing for them, but that's one of several disruptors that are out there. But I think at this point, like if this is trading up in the 500s, I would still say, yeah, it's probably early. Unlike Salesforce, I think that this is more value than trap. Now, I'm not getting into Adobe. Again, I like a really concentrated portfolio, but this is one of those names that it's like, if I had to double my portfolio size, Adobe might make the cut. I would need to do a lot more groundwork on it too. So make sure you do that. Value trap means you see the valuation is nice. Now, compared to this to what we were talking about with CRM, forward P looked quite rosy. Current P, not so good. And again, forward is just a guess. Price to free cash flow is more attractive. Price to share as well. I don't remember price to book, and that really doesn't matter. The margins are still really impeccable. That's something to keep an eye on. And I expect that you're right, Tevis, that there will be, that's operating leverage. Here's the margins by category. I expect that there might be some impact on margins on digital media, for instance, which has just ridiculous margins. It has come down a little bit. Maybe we see that at 90%. It's not a great thing for Adobe, but again, for where they're trading at, I think maybe the market is underrating them a little bit here. And there are other products, but Adobe's pretty sticky for a reason. So yeah, we'll have to see. And it may be a little bit early yet too, but yeah, if you guys are getting in that, like if I had to pick one or the other, easy Adobe, it would be a stupid pair trade, but long Adobe, short CRM.
Wow, that's an interesting hot take. Yeah, I don't know if I have deeper thoughts on like that as a pair trade. I'm not the biggest
I
fan
wouldn't
of
do that.
CRM. I've used both as a like actual consumer, and I don't love the experience on either of them, quite frankly.
Yeah.
I might tend to agree with you simply because like Adobe is the only game in town for creative services. So the fact that I don't love it as a consumer might be their moat as a business, if that makes sense. I don't know, man. Like I want to be invested in experiences that I also enjoy as a consumer, right? So that's
Likewise.
why I never owned them. That's why they were never on my radar. I just didn't really like them. Same with CRM, right? I just don't like them as a service.
Yeah, and I really like Figma, so it's
Figma's great.
really good user experience.
Figma's great. Yeah, exactly. They're getting into Adobe's territory a bit more than they have been, and great. They should. They need to break up that monopoly. Okay, shall we wrap there, Roy?
Sounds good.
Thank you, everybody, so much for watching and sticking with us through technical difficulties. We were live for 2 hours and 15 minutes, and there's still 130 of you in here. So appreciate that. If you like the content, then subscribe and consider sharing with other people. We will be back next Tuesday at 6 p.m. And that's it. Goodbye now. Good luck on Tesla earnings if you celebrate. And by the time we do this show again, we will have done it on SoFi's earnings day. So we're going to have hot takes right after SoFi earnings. So definitely make sure to tune in for that.
And PayPal.
And I'm trying to gather an audience, Roy, not turn one away. Okay. But yes, and PayPal as well. Thanks, everybody. See you next time.